Welcome to Fin for Beginners. Today, we're diving deep into the world of exchange-traded funds, commonly known as ETFs. As a beginner, understanding ETFs can be your stepping stone into the vast universe of investing. In simple terms, ETFs are like a basket of securities that can be bought or sold on a stock exchange. Much like individual stocks, they're a versatile tool, offering a great way to diversify your portfolio. So, what exactly are ETFs? Stay tuned to find out. ETFs, short for exchange-traded funds, are a type of investment fund that trades on stock exchanges, just like individual stocks. But unlike individual stocks, which represent a share in a single company, ETFs are made up of a collection of securities. These can be stocks, bonds, commodities, or a mix of all three. This makes ETFs a bit like a shopping basket filled with different investments. Instead of just buying an apple, you're buying a whole range of fruits. Now, ETFs can track a variety of sectors and markets. Some ETFs might track an index like the S&P 500, essentially mirroring its performance. Others might focus on a specific sector like technology or healthcare, or track commodities like gold or oil. And because ETFs trade on exchanges, you can buy and sell them throughout the trading day, just like stocks. But why would anyone want to invest in ETFs? Let's find out. One of the main benefits of ETFs is diversification. Instead of buying individual stocks, you get a basket of them in a single ETF. This essentially means you're spreading your investments across a variety of assets, which can help to reduce risk. If one company in your ETF performs poorly, it's likely to have less of an impact on your overall investment. Another advantage of ETFs is their lower fees. Traditional mutual funds often come with high management fees that can eat into your returns. But with ETFs, you'll typically find much lower expense ratios. This is because many ETFs are passively managed, meaning they aim to mirror the performance of an index rather than trying to beat it. Furthermore, ETFs offer flexibility. They trade like stocks, so you can buy and sell them throughout the trading day, at the market price. This gives you the ability to react quickly to market changes. Sounds simple enough, right? But how do you actually invest in ETFs? Investing in ETFs is as straightforward as buying regular stocks. You can buy and sell them through a brokerage account. Let's walk through the process. First, you'll need an online brokerage account. This is where you'll purchase your ETFs. Once you've set up your account, you can start researching ETFs. Look out for the ETF's ticker symbol, a unique series of letters used to identify it on the stock exchange. Next, determine how many shares you want to buy. Remember, the price of ETF shares fluctuates throughout the trading day, just like individual stocks. So the cost will depend on the market price at the time of your purchase. Once you've decided on the number of shares, place your order. You can do this by entering the ticker symbol and the number of shares you want to buy into your brokerage's trading platform. But remember, like any investment, ETFs come with their own risks. While ETFs have many benefits, they also have risks. Their value can go up and down based on the underlying assets. This means that if the assets within the ETF perform poorly, the value of your investment could decrease. Similarly, if the assets perform well, your investment could increase. It's a bit like riding a financial roller coaster, exhilarating and nerve-wracking all in one go. Another aspect to consider is transaction costs. Every time you buy or sell an ETF, you may incur a brokerage fee. These costs can add up over time, especially if you trade frequently. So it's important to factor them into your investment strategy. Finally, how the ETF is managed can also impact its performance. Some ETFs are actively managed, with a team making decisions to try and outperform the market. Others are passively managed, simply tracking a specific index. Each approach has its potential upsides and downsides. And there you have it, a beginner's guide to exchange-traded funds. Informed investing is smart investing, and now you're a bit more informed about ETFs. We've journeyed through what ETFs are, their benefits, how to invest, and risks to consider. Remember, diversification, liquidity, and lower fees are some advantages, but always be mindful of potential risks and costs. Keep learning, keep exploring. Knowledge is your greatest asset in the investment world. Thanks for watching and see you in the next video.